Warren Buffett may have made his last deal. We've crunched the numbers and it's clear you must be investing globally. Speaking of investing globally, we're going to look at why we don't invest in Japan. And in the near future, you might not be watching this on your laptop, TV, or on your phone. We're going to look at the future of computing. Welcome to Equity Mates Investing, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. Those introductions keep getting longer.
Yes.
But it's just a function that we have a lot to talk about.
We do.
There's a lot of interesting stuff happening in markets, but the good news is there's a lot of interesting stuff happening here at Equity Mates HQ as well. The most interesting and the most relevant
Drum roll.
We are hiring.
Yes.
So we are looking for someone to come and help with our operations, to help us become more efficient, so we can produce more content and we can look at ways to integrate all these AI tools into our production processes. So if that sounds like an interesting challenge and an interesting job, head to equitymates.com/careers. And then we're also hiring for someone to come and help us on the commercial side of the business so we can bring more money in, so we can produce more content to help more Australians improve their financial literacy and learn to invest. So if that sounds like a mission that you want to be a part of, if we sound like a team that you want to be a part of,
You do, trust us.
equitymates.com/careers.
News and markets.
All right, well, headlines we're going to cover today. Warren Buffett may have made his final deal, and a reminder to invest globally, Ren. Let's start with our good friend Warren Buffett.
Our good friend, our close personal friend. We have been in the same room as him before.
Yep.
There was also 30,000 other people in said room, but we will always be able to claim that. So for people who are unfamiliar, Warren Buffett, history's greatest investor, took over Berkshire Hathaway, a failing textile mill, in 1965 and has returned 5.5 million% since then. Not bad.
That's ridiculous.
He is 95 years old and he's announced that he is retiring at the end of the year. So really we're watching the final stages of one of the great investing stories play out. Berkshire has $344 billion of cash on its balance sheet.
Yeah.
So this deal in the scheme of things, not that big,
change.
but it will probably be his last large deal. They have bought OxyChem for $9.7 billion.
Yeah.
Now, OxyChem is a subsidiary of Occidental Petroleum, a company that Buffett and Berkshire have loved for years and have invested in for years. They are a low-cost producer in the Permian Basin, which is this wildly successful shale oil field in Texas. And Occidental, one of the lower cost producers there. Buffett, I think they've been investing, I think they own about 27% of the company now. But Occidental has a fair bit of debt. And so this deal allows Occidental to pay down some of their debt.
Yeah.
So what is OxyChem? The headline is oil gets turned into a lot of things other than gasoline. Gets turned into plastic products, blah, 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 a whole bunch of stuff. OxyChem is Occidental's arm that produces a lot of their products. They're one of the 3 largest American manufacturers of PVC and then a bunch of other chemical products as well. Berkshire are now going to own that company.
So Berkshire own about 20% of Occidental.
Yeah, I think 27,
or whatever it is. And OxyChem is a subsidiary of Occidental.
Yep.
And so Berkshire's all cash deal, 9.7 of which is going to go to Occidental.
Yep.
And they're then going to use that to pay down debt.
Yep.
And Berkshire then own 100% of OxyChem and still 27 or whatever of Occidental.
Yes.
Gotcha.
Yeah. So Berkshire they already have some chemical players. They have Lubrizol, which is another chemical player. So in theory, it should complement their existing business there.
Why not just invest another 9.7 billion
in Occidental?
Yeah. You still, by virtue of being a shareholder of Occidental, still get this.
So
do you know
Occidental
what I mean?
acquired Crown Rock, which is like another oil and gas player, in 2024 and took out a bunch of debt to do it. With oil prices softening, because I'm not sure if you've been following, but oil prices are down almost at $60 a barrel.
Yeah.
OPEC keep saying they're going to release more oil, even though prices are low. The theory is Saudi Arabia and Russia want to take market share back from US shale oil producers because Saudi Arabia and Russia can produce a barrel of oil cheaper than the US producers. It seems prudent to reduce your debt while you can as oil prices are softening. Because you don't want to get into a position where oil prices get really low and all of a sudden you can't service your debt.
Well, time will only tell if this is his last investment, but yeah, I mean, only 3% of cash. He's got plenty to play with. 3%
of the cash. Yeah. It's Berkshire's biggest deal since they bought Allegheny Insurance in 2022, and it will probably be their last deal. Because we've got 3 months left before Buffett retires.
He retires.
Yeah.
He's going to stick around as chairman, I think.
Yes.
He's stepping down as CEO.
And I think, if this is his last deal, it sums up a lot of the hallmarks of what made Buffett successful. He bought incredibly boring businesses that he held for the long term and just let them tick over and do their thing. And no one gets excited by petrochemicals unless you love Exxon. But I think it's just another sort of example of a business that's just going to compound away.
Absolutely.
I can't imagine America's demand for PVC is going to go.
No. Well, Ren, we're at the end of Q1 for FY26. And so that is for people just joined July through September. And so I want to just have a look at how markets have been performing because there's a lot that's happened in the last 3 months. So there's been a lot that's happened this year. It's part of sort of the quarterly portfolio review that I do just to make sure that everything's still on track and I'm not missing any opportunities. And this was, when I looked at the numbers, a real reminder of why we talk time and time again about the importance of investing globally. So I just want to give you some numbers to sum up the last 3 months around the world. So some of the best performing parts of the market, US small caps up 12.5% for the past 3 months. Emerging markets are up 11%, led by China. Interestingly, the Indian market has been down a little bit. No surprises that big tech has performed well. The NASDAQ was up 11%, the S&P 500 up 8%. If you look at the developed markets around the world, ex-US, they're up 7.4%. Europe, ex the UK, is up 2.8%. The UK itself has done reasonably well, 7%. The ASX 200 is up 3.6%. Couple of standouts though, gold has had an incredible quarter, up 17%.
Yes.
And our good friends, well, not good friends, but the Czech Republic, I couldn't get the 3 month, but it's up 48% year to date. The Czech Republic market. And the second best performing is Poland. The Polish market is up about 35%.
Czech Republic just elected a populist billionaire who describes himself as a Trumpist and wants to cut off all support to Ukraine. So
there you go.
Probably not the market that I'm getting excited by right now. No. But anyway, good to know.
Yes. Now, some of the highlights over the last sort of quarter, Ren, India and China have both been doing well. India particularly, I know I said that they have had a poor quarter, but they both now make up about 22% of the emerging market index, and that's up from 8% over the last 4 years for India. NVIDIA became the first company to reach $4 trillion. They did that in July. Growth stocks are outperforming value, which is no surprise. And we are seeing the small caps sort of performing like some of the experts expected at the start of the year. They reached record highs, or they have hit their highest point since November 2021. However,
in the US.
In the US, yeah. And gold up 47% year to date. It's the strongest annual gain since 1979. Huge.
Wow, so, okay. That's a big data dump.
To wrap all that data dump up though, the point is, particularly here in Australia, if you have a lot of home country bias, you're in your superannuations in Australia, properties in Australia, you're buying the ASX 200, you're missing out on a lot of global opportunity. And I think what we're seeing here is, whilst yes, the NASDAQ and the S&P 500 have been doing well, other markets around the world have done just as well, if not better. And if you're not setting up a portfolio that gives you global access, then you are missing out on these opportunities.
Yeah, well, I mean, I think the point is, you said the ASX 200 is up 3.6%. America is up, depending on the index, 8%. But, no one would have thought the UK was primed, but it's up 7%. So, yeah, I think you're right. Just invest globally. Gold is something that I've been paying a lot of attention to because, so for people who aren't subscribed, we produce a daily news email where we give you a 5-minute dot point summary of the news that you need to be aware of, moving markets, including this week. Did you see the Brisbane Broncos? Yeah. Brisbane Broncos ripping up 40% in the morning. It softened a bit, but like, God.
The morning after their grand final win.
Sorry. Yeah, the Monday after their grand final win on the Sunday, just absolutely ripped. Anyway, you would know that if you were reading our email. Yeah. But gold, just the amount of times I've written, gold has hit a new all-time high, breaking $35,000 US dollars an ounce, 36, 37, 38. And I think it's, at least as we speak, it's nearing 39,000 US dollars an ounce. The story is, inflation and money printing and US government shutdown and flight to safety.
Yeah.
But gold has had an incredible run.
Yeah. And I mean, we know plenty of experts who say sort of a 5% exposure thereabouts is the way to go.
The good news is you can do it through ETFs. You don't have to go and buy expensive jewelry.
Yeah.
But yeah, I think, that takeaway, invest globally. It's never been easier. It's never been cheaper to invest globally. So make sure that you break out of your home country bias.
Love it.
Let's ask the community.
Hey, Equity Mate.
I just had a question.
Hey, Bryce, friend. I've got a question.
Answered.
Well, we love getting questions from the community. If you'd like to leave us one, head to equitymates.com/contact. We will prioritize questions that come through as a voice note, just like today's has from Brian.
Hi guys, love the show. My question today relates to Japan and investing in Japan. Feels like we only hear Japan referenced with Asia ETFs ex-Japan, but when I also look at the Japan Beta Shares ETF, it seems to have had a great run over the 5-year return. Could you talk about why it's excluded from other investments and what place Japan has in an investing portfolio? Thank you.
Thanks for the question, Brian. As I said, we love getting them from you guys, from the community, so keep them coming. But this is a great question, and Brian, you are right. Often most Asia ETFs are ex-Japan, and there is a reason for that. So let's jump into it. The main reason, Ren, is that Japan's economy and stock market make up a large percentage of the Asia-Pacific region by market cap, often overshadowing smaller economies.
Yeah, so this is changing, like the rise of the Chinese companies, of Samsung in South Korea, of TSMC in Taiwan. When these products were set up, and even today, if you were to have a full Asia ETF, it would be dominated by Japanese names.
Yeah, so pretty straightforward, gives you, access to the non-Japanese companies.
Yeah, now there are some other reasons. So institutional investors will typically already have separate, dedicated Japanese holdings. So Asia ex-Japan is kind of like a complementary product for them, just because the Japanese market is so big. That a lot of investors will have that as a sleeve in the portfolio. Again, this is changing, but from a characteristics point of view, the Japanese market was more mature, had a different growth profile and a different sort of economic makeup than a lot of the non-Japanese markets, where it was the story was, a development story, markets emerging, an emerging consumer class, technological adoption. And so again, from like a thematic point of view, Asia ex-Japan was interesting to people who wanted to invest in this sort of rise of Asia.
So then let's have a look at actually how Japan has been going recently, because it's been a pretty interesting turnaround story over the past few years.
Yeah, and as Brian noted, the BetaShares Japan ETF has done very well.
Yeah.
So over the past 5 years, it's returned 17.39% after fees.
Yeah, so that's the HJPN ticker.
Yeah.
And there's nothing wrong with 17%.
I mean, that's great. That is great. Since inception in 2019, it's done 15.71%.
Yeah.
Great. There is a caveat though. It's the hedged product.
Yeah.
So if you were going to look at the unhedged product, and just to bust that jargon, the BetaShares hedged version takes away the currency fluctuations between the Australian dollar and the Japanese yen, because the yen has been weakening. The BetaShares product, I said, did 17% over the past 5 years. The iShares MSCI Japan ETF, which is non-hedged, has done 9.6% in that same time. A bit less than half of the returns has come from currency hedging rather than from Japan's market performance.
Yeah.
But in saying that, like nothing wrong with 9.6% a year for 5 years. You would think that, hopefully over the long term it delivers. Unfortunately for Japan investors, the iShares ETF since inception has delivered 2.7%.
Well, that's probably because Japan for a long time, Ren, has been a bit of a drag. This turnaround story is very recent, really. Even this year, Japan equities actually finally broke out of a decades-long slump, reaching an all-time high for the first time after 34 years. 34 years it has taken for it to reach its previous high. So has been a bit of a drag, but look, as Brian noted, most recently there has been a bit of a turnaround story. So the final part of his question is, what role does Japan have in portfolios? What role does it play in our portfolios? What role should it play in his portfolio? The first part to that is it's completely up to you. We don't know your circumstances. We don't know what your investing goals are. So to say what role Japan should play in your portfolio, we can't really say that. But all we can do is talk to why we don't have it in our portfolios specifically. I think for me, Ren, it comes down just to the function of how I set my portfolio up. It's my 4 core ETFs are ex-Japan, and I'm okay not having Japan in there given the global exposure that I'm getting pretty much everywhere else around the world.
Here's the question. If Vanguard changed that ETF that you invest in and it was no longer Asia ex-Japan, but it was Asia inclusive of Japan, would you, how would you think about that?
I'd have to have a look at, like all good investors in ETFs, have a look under the hood and see how they allocate in terms of weighting. Because again, if it's going to be 90% Japan, I'd probably reconsider.
It wouldn't be 90%.
But but if it's a slightly more even mix, I'd be okay with that.
Yeah.
Yeah. For me, other than recent times, I'm okay to forego that with opportunities elsewhere.
Yeah. Okay. Nice.
What about you? What would you do?
So for me, when I think about like getting global exposure, like we always talk about it, get true global exposure. You have to recognize that global exposure always comes with trade-offs. And so if you think about the two main ways you get global exposure through ETFs, it's either a global index where the index provider will just get, every company in a developed market or in developed markets or in the whole world and say, we're going biggest to smallest and we're weighting it that way. If you go that global index approach, these days over 70% of the ETF is the US. So that's one way. The other way is you could do a all-in-one ETF like DHHF, and in that case, then it's like an ETF of ETFs, and the ETF issuer will set the weightings. With DHHF, 80% is the US and Australia. So every global portfolio has trade-offs, and I guess for me, thinking about the portfolio that I'm building, I'm comfortable with the trade-off of being underweight Japan to having zero weight in Japan, to upweight other parts of the world. Because if I was to sort of sleeve off a part of my investment money and say I want that in the Japanese ETF, I would be downweighting another part of the portfolio. And for me, you never know where the next leg of global growth is going to come from, and we've missed out on this sort of Japanese revival. But for me, if I just think about like the demographic story and the economic story and where I think the greatest opportunities will arise, like I think I'm comfortable with how my portfolio is set up.
Interestingly, looking at DHHF, as you said, 80% US and Australia, but the third highest weighting is Japan at 3.6%. So
I think from memory, now this is going to test me, but I think Japan was at like 3, and then we had China and Taiwan and India in the 1s.
China, Canada, Britain.
No. Just thinking about the Asian countries.
China, Taiwan, India
in the 1s. Taiwan will really
China
just
just on 2.
Okay. Taiwan will really just be TSMC. And then obviously China and India. So if you think about like if you were to pull those out into
like Asia.
Into an Asia ETF, like Japan will be the biggest weighting in it, then China, then you've got Taiwan and India. But from an individual company point of view, Taiwan will probably be TSMC will be close to the top. Like you're getting to the point where, okay, if China gets a bit bigger, if India gets a bit bigger, if South Korea comes through a bit more, you're starting to get like an Asia ETF that could make sense. But yeah, like what you said there, even now Japan would still be the biggest weighting. Imagine what it would have been 10 years ago when these products were being made.
Exactly.
Like Japan would have just dominated the Asia ETF.
Yeah.
So look, there's no right answer. I think if you want some Japanese exposure, I would encourage you to look at these ETFs, think about currency hedge versus non-currency hedged. Again, it's up to you. But yeah, I think for me, it's like the conclusion to this question is recognize that any portfolio you build has trade-offs. Think about the trade-offs you're making and go accordingly.
Well, thank you so much for the question, Brian. We love hearing from you guys. Again, equitymates.com/contact. Leave us a voice note. We're going to take a quick break, and on the other side, we are going to look at the future of computing and the devices that we're going to be addicted to. We'll be right back. Welcome back to Equity Mates. Ren, desktop computers, laptops, phones. What is next? The future of computing is being worked out in the corridors of big tech at the moment. We've got Zuck, we've got Tim Cook, you name it, all working on it. And there's been some developments that are worth paying attention to. So here are some of the devices that we'll be addicted to next. And it's not the Apple iPhone.
Well, no, we're addicted to that now.
Yes, we won't be in the future.
So I think that there's a couple of news stories that we wanted to pull together because with an investing lens, they're relevant to big tech and we all have investments in big tech either directly or through indexes. But also just from a consumer lens, I found this quite interesting because we're all going to be using these devices that big tech are cooking up. And so the headline where we want to start here is Apple.
Yeah.
Now, Apple made a lot of fanfare about the Vision Pro headset.
So much.
Do you remember, was it what, 2 years ago, 3 years ago, they had, first person that bought it, they had like crowds outside cheering and
2024, it feels like longer than that. Yeah.
There was those early videos of people using them on public transport.
Yeah.
I was pretty excited to try it.
Yeah.
Can say I haven't tried it. Can also say I've never seen one in the wild.
Never. Yeah. What a massive collapse.
It's not just us saying it's collapse. Apple internally, now this is according to a Bloomberg report, Apple internally have kind of acknowledged it's been a bit of a flop. They are pivoting away from them. So the report from Bloomberg is that Apple have told internal teams to pivot to other devices, which we'll get to because there's a couple coming down the pike. But before we do, let's just pour one out for the latest failure of big tech to make smart glasses.
So we've had Google Glass.
Yeah.
That was a while ago,
2014.
I would say. About a decade ago. That was a big flop. Then, Microsoft HoloLens.
Yes.
And then, obviously, Apple Vision Pro. Big tech have tried glasses with a lot of failure. And hang on, there's one missing there, which was the Snapchat. Didn't Snapchat have some
Snap had glasses.
They had Ray-Bans, some Ray-Bans.
The other one that's missing is Meta. We'll get to Meta in a second.
Yeah.
But look, Apple's smart glasses dream isn't over. They are pivoting to just a different design of smart glasses. So they're working on more traditional glasses. For people who are watching on YouTube, like the glasses that Bryce is wearing today. 2 models in the works for Apple. Reportedly in 2026, they're going to release smart glasses that will pair with the iPhone, but there'll be no digital display in the lens.
Interesting. So I guess you'd just be communicating with your iPhone.
Yeah, I guess it's like
Sounds.
Siri, read me that text,
tell me
or
when to
like
turn right.
Siri, put a timer on for my cooking, or tell me when to turn right. That's not bad.
Like, I don't pay that, to be honest. But anyway, I'm not a massive Siri user.
Neither.
Yeah.
So that's 2026, and then reportedly in 2027 they will have a model of glasses with their own digital display.
Yeah.
Now, the question is why? So Apple don't split out their Vision Pro sales, but apparently they just haven't been selling well. But what has been selling well, and reportedly what has prompted this pivot from Apple, is Meta.
Yeah.
Because Meta's smart glasses are selling well.
Yeah.
Which is somewhat surprising.
Well, they've been working on these for, obviously, as you said, they first sort of released their own not their own, but I reckon they've been working on these for a while now. They have done a version of the Ray-Bans, and that wasn't sort of that great, but they've certainly been working on these in the background.
So Meta, I mean, look, they've had some not failures, but some struggles with glasses as well. They bought Oculus and they made the Meta Quest, the VR headsets, which I don't think have sold that well. But then they partnered with EssilorLuxottica, the glasses giant. They own Ray-Ban and a bunch of other glasses brands. But in October 2023, they released their second generation models, and those reportedly have sold well. So here are the numbers. Since then, they've reportedly sold 2 million units of these smart glasses. But what has got the tech world sitting up and taking notice is that sales tripled in the first half of 2025.
Wow. Now, Ren, it hasn't all been plain sailing for Zuckerberg.
No.
There's a very funny video where recently he tried to demo these at a live product demonstration.
Yeah, launch the latest version of these glasses.
And let me tell you, heads will roll because he tried to make a video call and it just wouldn't connect.
There we go. Uh-oh. Well, let's see what happened there. That's too bad. I don't know what happened.
Tried multiple times.
I think they blame the Wi-Fi in the room.
It's like, come on, guys, you're Meta. Your Wi-Fi is going to be fine. Couldn't connect, but nonetheless, they're selling well. There's a lot of demand. But we should also explain that there's a range of, I guess, glasses that Meta are releasing. So this one is just your pure compute, like AI. So it displays on the glass. You have a wristband where you can control the display, but that's it.
Think of it as like a computer in your glasses. It's a phone display here in your eye, but that's the extent of it.
Yeah. Then they've got what they call the Orion, which is augmented reality. Thicker frames, they're a lot bigger and chunkier, but that's where it overlays graphics and imagery into your own environment and you can engage with it that way. And then that's really...
No, then there's virtual reality, which is the Meta Quest.
Which is Meta Quest, yeah. So they're right in the thick of it.
They are right in the thick of it. And they've got some pretty ambitious growth targets. So they've sold 2 million since October 2023, so in 2 years? Zuckerberg has told the team he wants to sell 5 million by the end of the year, so another 3 million in the final quarter, which is big. The question becomes, is Meta too far ahead? And that's not just me. Wired wrote an article in August 2025 titled, Meta has already won the smart glasses race. So the question is why? EssilorLuxottica is the biggest player in glasses. They have 30% market share. In North America, it's 45%. Some people say those numbers are well undercooked. Like they're kind of seen as the glasses monopoly.
Right.
Meta invested $3.5 billion in EssilorLuxottica for 3% of the company. So not a huge shareholding, but it does make them the company's second largest shareholder. Ties the two of them together and really aligns them on a product strategy. It allows Meta to really ensure that smart glasses aren't just a nice product adjacency, but like a core part of their strategy going forward.
Yeah.
But importantly, and this is where people start to ask, has Meta built themselves a really strong advantage here? If you think about smart glasses relative to some other forms of technology, they're quite personalized. Now, I don't have glasses, but glasses are something that need to be fitted to your face. Often they need a prescription for the lenses. You need distribution. You need somewhere where people can walk in and get fitted and get their eyes tested. And that's what EssilorLuxottica has. And so their retail distribution becomes Meta's retail distribution for smart glasses, which every other big tech player is going to have to play catch up on.
Yeah. I can sympathize with that. I am doomed when my current glasses break because they're the only pair left in distribution from Specsavers. So I'll have to change frames. They don't make them anymore. So they'll have to change. I'll have to change frames.
But they're not that like bespoke.
Oh, no, they're not bespoke, but they just are the best fitting I've ever had. So I'll have to just
wait until you try these Meta smart
I can't
glasses.
wait for this. I can't wait.
They exist. And you could get them.
No, they're too thick at the moment for me. A bit too thick.
The Orion.
Yeah.
But you could get the compute ones.
I could. True.
Yeah.
Well, I might do it because Zuck has also said in his Q2 earnings, if you don't have glasses that have AI, you're probably going to be at a pretty significant cognitive disadvantage compared to other people. Man, we're all going to be walking around with glasses
Yeah,
on.
glasses on, chips in our head. Yeah.
What a future. What a future.
Now, as we talk about smart devices and the future of computing, it's probably worth just quickly touching on OpenAI.
Yeah.
Because they are making a big play into devices, which reports say not going too well.
No.
So for context, they acquired IO for $6.5 billion, which is Jony Ives' company. Jony Ives, key designer in the iPhone, well, in Apple's journey, iPod, iPhone. And it seems that they're getting the Apple band back together. So they bought IO, which brought in more than 20 former Apple hardware engineers alongside Jony Ives himself. But according to reviews of OpenAI's LinkedIn, they've also recruited at least a dozen other Apple hardware experts this year alone. So they are getting the Apple band back together. And the way that they're speaking about their device that OpenAI wants to create is they want it to be a third device alongside your phone and your computer.
No. Won't work.
Just straighten up.
No.
Okay, well, look.
It's got to be good.
It does have to be good.
Yeah.
So the FT have recently written an article about how they're struggling. They had plans to launch a device in 2026, but that is now in doubt. They want it to be screenless. It seems like Jony Ives is having a real reckoning with some of the negative impacts of the phone.
Yeah.
And so they want it to be screenless. They want it to be less addictive, I guess, or less problematic in some ways. The problem is the phone is pretty good.
It's also not the screen that does that. It's a lot of the underlying code that these companies do.
Well, it's a lot of the apps that are enabled by the screen.
Exactly.
Yeah. So they're trying to figure out how to make this AI device. They're trying to figure out if it should be always on or only respond to specific prompts. But they're also struggling to get the AI to end conversations. Because you know how AI always ends with would you like me to?
Yeah.
So apparently it struggles to know when the conversation's done.
Interesting. Yeah. Always wants the last word.
One anonymous source said to the FT who's working on this device, quote, "The concept is that you should have a friend who's a computer who isn't your weird AI girlfriend." Maybe a subtweet at some of the product development that Elon Musk has been doing, if people have been following that. But another thing they're struggling with is, you know how these AI models always tell you you're great?
Yeah.
They always tell you your ideas are great.
Yeah, amazing.
Yeah. That's such a good idea.
Yeah.
One other anonymous source said, quote, "Model personality is a hard thing to balance. It can't be too sycophantic, not too direct, helpful, but doesn't keep talking in a feedback loop."
Yeah. It could do the world a lot of good if you kept being told that you're doing really well.
But no, people need to be told when their ideas are bad.
Who cares?
Well,
look at them.
That's a separate discussion. But I think my challenge reading all this is
hardware's hard.
You need a better product than the phone. To have a third device that complements the phone and the laptop, you need to offer something that the phone can't do.
Yeah.
And if everything that their device does, you could just do on your phone. Speak to AI, get it to what is it doing that is incrementally better?
Yeah.
Which is why if I had to bet on this screenless AI device or smart glasses, unfortunately, I think I'm backing Zuck.
Yeah, I can't wait. I can't wait to get around it. I mean, I might give it a go and see what it's like. Anyway. Future of computing is here, I would say, Horan.
It's coming.
It's here.
It's here. Well, the future is here. It's just not evenly distributed.
Yes, well said.
It's not my quote, but I do really like that quote.
Well, that brings us to the end of today's episode. We've covered plenty. If you'd like to leave us a question or get in contact with us, head to equitymates.com/contact. A reminder that we have a couple of jobs open here at EquityMates as well. Head to equitymates.com/careers if you'd like to find out more information about those jobs. Ren, we're going to leave it there. That brings us to the end of our episode. Stay around because next episode we're going to look at two of the most common ways that investors can achieve global diversification.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful. Equity.